Vast Resources is an AIM-listed resources company with mines and projects in Romania, Tajikistan and Zimbabwe. There's been lots of updates from this company, and to get the latest, I'm joined by the Chief Executive, Andrew Prelea. So Andrew, since February, the company has successfully raised over £3 million. This includes a substantial purchase by yourself. I understand the money's been used for the ongoing drilling programme and production ramp-up at your polymetallic mine in Romania. Now, you've said production there continues to exceed projections. So are you hopeful that this operation will soon be self-funding?
First of all, thank you very much for having me, Sarah. It's greatly appreciated. Nice to finally meet you. Yes, as I stated in the previous RNS, I think it was on Monday or Tuesday of this week, past Easter, had we not hit the lower grade ore, and I'll come to that after, in March, with the quantity that we had actually mined and milled, we would have reached a break even for the month of March. And just to expand upon that, while what we're doing, which is quite unusual in the mining sector, is while we are developing, we are mining. Most mines start, they develop everything underground, then they start the mining production, and also they have the data and the drilling results, which we had not had. We'd only had historic data, and they move forward. And that's normally a 3 to 5 year program, and tens of millions of dollars for a mine this size. There's over $60 to $80 million of existing infrastructure in this mine. In late 2021, we had an issue with some of the historic areas in level 17, which most people know we had friable ground. So we had to actually redevelop the underground at lower levels while returning back to the high grade area in level 17. We've now achieved that, and we're going further down after the initial drill holes that were mentioned also in the RNS, and we're now working towards level 19. The result of that in narrow vein mining is while you're developing, is you dilute your grade as you are blasting, while you're producing the infrastructure. So whereby we would have had a high grade, I think we milled close to 8,000 tonnes. If had it reached the same grade that was in February and January, we would have been a break even on a standalone basis for March. And as we continue to develop and we continue to mine, we're producing more and more concentrate, approximately 250 to 280 tonnes of concentrate a month just on the copper is a break even for the mine itself. And our target is to get way above that in the next 3 months, and by June to be break even and very possibly even profitable at the mine and covering the cost of the group. That is the intention of the management.
The intention for management is also for the company to achieve nameplate capacity within the first half of this year. So for investors who are unfamiliar with that term, what does nameplate capacity mean?
That's very tricky point. I mean, we're in the business of actually producing concentrate, not mining. Nameplate capacity for the existing infrastructure is around 14,000 tonnes a month. To achieve that, we had to ramp up the staffing levels to get to that level. That means that we have to start working 24/7. That's not something they like to do here in Romania in the mining sector. Generally underground, they don't work more than 5 days a week. They can only work 6-hour shifts, which means that we have to train people because the mining sector was closed for a better part of 20 years. We opened up a school, and we're continuing to train new young people within the area to create jobs for the region. So the intention is to get to 14,000 tonnes a month. But more importantly, the intention is to get over 300 tonnes of concentrate a month, because that's what we're selling. We're not selling mine tonnes, we're selling concentrate. But if we can reach 14,000 tonnes a month, which is our plan for H1 this year, and we get the consistent grade that we've been achieving in January and February, not taking into account the March dilution caused by development, then that will well exceed break even and into the profit centre for the mine itself, and possibly for the entire company.
Now, listen, I was surprised that you've had 2 fundraisers in as many months. I'm wondering what's so cash hungry that this was necessary. Is it because you're training up those youngsters, or because the working day is so short at 6 hours?
It's a combination of everything, but most importantly, and I'm sure you'll get to the question later, we were anticipating the release of the historic claim by this time. That hasn't been achieved. We have been advised that will, I'm sure you'll ask that question later on this month or early next month. And this was basically a bridge to fill. And there's other issues such as shipping delays, which allows the cash to come in later from what we produce. But most importantly, the initial drilling results that were achieved in this first phase of the extension of the drilling program to increase the resource for the company, which commenced as per the, I think, February 27th RNS, has shown some very, very positive signs of ore at depth. Now, there are two ways of developing the underground. One is the classic spiral method, where all of your fleet has to go down a spiral route, which is hungry for human resource and also for diesel, and diesel is increasing. Or we can do what is drive a decline, which runs parallel to the ore body, and then put conveyors in there, and that way we can reduce staff and reduce overhead costs. So what a lot of this money is for is to develop that relatively quickly and to go to a further depth so we can go deeper as a result of that initial drilling program, and also to maintain the company, to make sure that we can keep the show on the road and continue it and increase up production. We're now purchasing some more underground equipment so we can actually ramp up to that 14,000 tonnes a month, and potentially we are also looking at designing going beyond that and going to a much greater production capacity at the mine, and that costs money, design and implementation, test work, etc. And that's been accelerated due to the production increase. And basically, this money was there to advance that and accelerate it. As I said, we were expecting money coming in from other sources. It didn't arrive, and that's why we did this small raise. Okay. However, there is an appetite for Vast shares, obviously. We did that last raise at just 10% below the closing bid price of the day before. There was not a heavy discount. And believe it or not, there were more people that wanted shares than we had to give.
That's always encouraging. Well, you talk about keeping the show on the road, but there is has been a bit of a sideshow going on. It is the big elephant in the room, and a tantalizing story. You're waiting for the release of diamonds. It is a historic case. You talked about claims there. So why did the diamonds, why do they belong to you? Why were they, or are they, in another person's possession? And when do you anticipate that they'll be returned? And then what are you going to do with them?
I mean, well, the history of the company is that it discovered the Marangi diamond fields in 2006. The company had won a Supreme Court decision to take the claim back. And part of that at the time was the confiscation of the 129,400 carats that were held in safe custody in the Reserve Bank of Zimbabwe to avoid anybody putting their hands in the diamond jar, let's call it. So they were put in safe custody to ensure that they weren't tampered with. That's why they're sitting in somebody else's possession. The company had gone through many legal processes with the Zimbabwean government between 2006 and 2010, and we deemed it impossible to return those stones already claimed in Zimbabwe up until 2018, which is just after I took over as CEO. We approached the Zimbabwean government with a more amicable solution, which was to take a new diamond concession and return these stones in question. There's a lot of hysteria about us announcing the fact that we were about to sign a concession in 2019, and I just want to remind everybody it was not us that actually made that claim. It was the Minister of Mines in Zimbabwe that made that claim, and we had to, under AIM regulation, address that because it was in the public domain. It was not public knowledge, and we did confirm that that was what was announced by the minister himself, and it's in the press, Bloomberg, Reuters, etc. And then COVID hit. Policy change happened within the government. We then reapproached the government in I think it was 2022 to say, look, we understand there's a policy change. It was very amicable with the highest officials in the country. At the very least, please return the stones that are in custody. They do belong to us. They're not subject to any further court cases. However, there was no legal avenue to allow that to happen. So we worked closely with people within the judicial system in Zimbabwe and within the government, and they found a solution only as late, I think, as July or August last year, as RNS in December. We lodged a claim in a process that was agreed by the government of Zimbabwe. And on the 6th of February, we received a judgment in our favour. And unlike a normal judgment, you cannot just walk into the Reserve Bank of a country and say, "Oh, please give me back my stones." There is a process, and that we've been following that process, and we're still confident that that process will come to a head towards the end of this month or early in May, and we're just on standby to go and collect.
Have you any idea what they're worth?
We do. There is a lot in the public domain as to their value back in 2006, 2007. There is not in the public domain, so I'm not at liberty to say, but the intention is to clean them, polish them correctly, meaning not polishing them as in the final stone, but as a rough, and then put them up for a tender process and realise the maximum value for shareholders.
So therefore, is the financing of the company dependent on the diamonds being polished properly, monetized swiftly? And if this doesn't happen, is it going to be another raise?
Well, I mean, it's not dependent. It is a lot better to go to finance companies with no debt than with debt. So the intention is to monetize those, make the company debt-free. There are other financing options for the company, and we are pursuing those, but I do not want to speculate on what is going to happen. We're not planning on raising money to reduce debt. There are other alternatives that the company is considering, but the focus is to try and do everything at once.
Let's go to today's statement. How do you feel about having an institutional investor?
Well, it's a first for the company. The company was founded by private individuals out of Zimbabwe back in 2005, 2006. They exited the company in late 2017, which caused a massive free float in the market of the shares. The new institution that has now acquired, I think, just over 5%, 5.5% of the company, has been accumulating over time. They have not been a participant in any of the raises that we've ever done. So this is purely an acquisition by an institutional investor on the secondary market. And for me, that's a positive sign. If we could get several more of those, we'd be very happy. But at least it shows that people are understanding what we have achieved in 3 jurisdictions, one of which Romania, where we are the only mining company operational. Many have tried and failed. We've managed to do that through several changes in government. We've got 2 mines licensed. As I said, we're the only ones in Romania who have done so other than the state themselves. We're in Zimbabwe, working closely with government to resolve a historic issue, which is also not an easy jurisdiction. And we are in Tajikistan, and we are the only ones at the moment who are in joint venture with the government in improving their mining system. I gave a speech last, I think 2 weeks ago. There was a Tajiki UK investment forum, which was hosted by the British government. I was a keynote speaker there on mining investment in Tajikistan. And just to put it into context, the only, I think from memory, 7% of the country has been explored. Of that 7%, there were 700 mining perimeters detected. Of those 700 perimeters, only 5% are currently being mined. The grades there exceed what I've seen anywhere in the world. I mean, it hasn't existed since the early 70s in Africa and Australia. Now we're talking gold grades between 5 and 7 grams a ton in situ, silver in excess of 300 grams a ton in situ, high grade tin, high grade. Remember, the tungsten was exceeding 2.5%. They've got more in the tailings than most tungsten mines have in situ grades. There is a unique opportunity to work in Tajikistan, and we're proud to be the first mining company to work with government in a joint venture to restart a mine successfully. It's taken a little bit longer because it's the sensitivity within the ore itself. It's a galena host, but with calcium fluoride. We have to extract the calcium fluoride for the government for their smelter. We had to reach a minimum 95%, which had never been achieved. We've gone over 97% now, and now we're focusing on the lead and zinc, which is where we will monetize our investment, or the investment of our joint venture partners. And that's now in operation. We're getting high grade lead and zinc, and we're planning on our first commercial sales in May.
Andrew, I now understand why you work 18 hours a day, 7 days. An awful lot going on, and a lot to look forward to hearing from the company. And thank you for addressing the elephant in the room, though I would have loved to have known what those diamonds were worth next time. Andrew.
Next time.
Next time. Andrew Prelea, Chief Executive of Vast Resources. Thank you very much indeed.
Thank you very much for having me.